A very good evening to one and all present here. I, Naman Anand, along with my co-host Ms. Garima Sethia, would like to extend our welcome to everyone present here on the finance panel of Sapience, the annual management conclave of Great Lakes Institute of Management, Gurgaon. The immediate impact of COVID-19 is that virtually every area of commerce, from global supply chains to the financial markets, has been disrupted. Finance functions have been forced to rapidly evolve to keep up with the pace of change. But driving beyond the nows means embracing the steamroller pace of this need to transform.
Thank you, Naman. Today, we have an accomplished panel of speakers to share their views on the topic purpose-driven business in the post-pandemic world. And before we begin, I would request Professor VP Singh, Program Director of PGDM, to put forth the welcome address. Over to you, sir.
Thank you so much, Garima. I really feel privileged in welcoming the esteemed members of the panel, Mr. Jayathu Singh, Ms. Tina Jaisinghani, Mr. Vinit Nagpal, Mr. Abhinav Nehra, Mr. Ashutosh R. Tiwari, and Mr. Sandeep Das Gupta. This is definitely going to be a very exciting panel discussion, and knowing Professor Preeti Goyal and knowing our finance department, which has put together a lot of thought in creating this kind of a discussion and having this kind of a panel to see that how in the ravaged world of business, which Naman has mentioned, that how finance function is going to provide certain amount of solutions. I'm really sure that the panel, along with our moderator, Professor Preeti Goyal, will take us through this evolution of finance amidst the nervousness which has been created by the COVID. We all know finance is essential for business needs, and business needs have changed a lot during this period. On one hand, we see that the business risks have risen. On the other hand, there is a greater need for GDP growth across the world. Now, it would be interesting to see how the finance function is going to balance both these concerns. Fortunately, technology seems to be at our side, and that is why we are seeing a revolution of fintech. Goods and services are being designed to match the changing consumer behavior for long. We are seeing that through fintech, financial services too are being designed to match the consumer requirements. And this has made the finance field even more dynamic and exciting. So I look forward to a very exciting discussion. I welcome all esteemed panel members. I welcome our moderator, all the faculty members and the students to engage actively in this discussion. Thank you so much. Over to you, Garima and Naman.
Thank you so much, sir. We would like to introduce our 6 esteemed panelists from the industry, along with our faculty moderator.
We heartily welcome our first speaker of the evening, Mr. Abhinav Nehra. Mr. Nehra is currently the Executive Vice President and Head at Network International with over 30 years of experience in emerging markets, working with Citigroup, United Bank of Africa, and EcoBank Transnational. He continues to be deeply involved in the African financial services ecosystem in digital lending, payments, and neo-banking space. He did his master's in business administration from University of Jammu and BSc in science from Punjab University. A very warm welcome to you, sir.
Thank you very much.
We welcome our next speaker, Mr. Ashutosh Tiwari. Mr. Tiwari has a distinguished experience of working with the leading fintech startups in India, namely Capital Float, MoneyTap, Flexi Loans, and now Razorpay Capital. Currently, he is the head of credit policy and underwriting at Razorpay, has served as the head of credit and risk at Flexi Loans. He has completed his MBA from the International Management Institute and Bachelor's in Commerce from Kirori Mal College, University of Delhi. A heartiest welcome to you, sir.
Thank you so much. Pleasure to be here. Thank you so much.
We welcome our third speaker of the evening, Mr. Jayathu Singh. Mr. Singh is the head of Enterprise Digital and Analytics India and the finance president of Global Commercial and Merchant Data Sciences of American Express India. Mr. Singh has 3 patents in data science and holds a master's in quantitative economics from JNU and a PhD degree in financial economics from Indira Gandhi Institute of Development Research. We welcome you, sir.
We welcome our next speaker, Mr. Sandeep Das Gupta. Mr. Das Gupta is a general manager in Mankind Pharma Limited. Previously, he has worked with Genpact as assistant vice president for 8 years. Mr. Das Gupta has completed his MBA from IMT Ghaziabad and bachelor's in commerce from Delhi University. He also holds a degree of accelerated general management program from IIM Ahmedabad. We welcome you, sir.
Thank you so much.
It gives us immense pleasure to introduce the next speaker of the evening, Ms. Tina Jaisinghani. Ms. Jaisinghani has been working with Axis Bank for 13 years now. There, she was the deputy vice president for 8 years in Hong Kong, and currently she is the head of credit in Singapore. Ms. Jaisinghani is a chartered accountant and has done her MBA in analytical finance from Indian School of Business. She also holds the elite certification of CFA and syndicated loans certification course. We welcome you, ma'am.
Thank you, Naman. Pleasure to be here.
Last but not the least, Mr. Vinit Nagpal is the 6th panelist of the evening. Mr. Vinit Nagpal is currently the Senior Executive Director at Intertrust Group, which is a finance company founded in 1952 with a specialty at corporate client services, fund services, and private wealth services. He was also the Vice President for Finance at the Deutsche Bank for 5 years. He has completed his MBA in Finance from International Management Institute. We welcome you, sir.
Thanks very much for having me here.
Very warm welcome to all the esteemed panel members. Now allow us to introduce the moderator of today's panel, our very own Professor Dr. Preeti Goyal. She is the Professor of Finance with over 23 years of industry and academic experience. She holds a PhD degree from FMS Delhi University and an MBA from George Washington University. We now request you to take the panel discussion forward, ma'am.
Thank you so much, Naman and Garima. And I thank all the panelists for being here. It's really a pleasure to be here on this panel with you and moderating this. We don't have a lot of time, and I know the students are really keen on hearing what's happening in the industry and how the industry has dealt with what has happened in the last 2 years and how we are emerging from it. So let's dive right into it. And maybe we can start with just kind of having each one of you go through what are the main challenges that your organizations faced as the pandemic hit and how you've emerged from it, and what are the new products and new processes that you have been put into place as you've emerged from, as we are emerging from this pandemic. So maybe we can start with you, Mr. Das Gupta.
Yeah, hi, good evening, everybody. First of all, I want to say thank you, and it has been a pleasure coming here and speaking to all the wonderful panelists and the guests, and to all the students out there. So thank you, everyone, to giving me that platform.
Mr. Gupta, your video is off. Is it possible to get that on?
Oh yeah, sure. Sorry, I didn't
Thank you
realize
so much.
that. No
Thank
problem.
you.
No problem. So in terms of the challenges, it's been almost 1.5 years the pandemic has hit. I'm working with Mankind Pharma. It's a pharmaceutical company wherein, we deal with the medicines and the patient's healthcare. So for us, the most important and the foremost thing was ensuring the delivery of medicine to the retailers, to the stockist, and to the end customer. So which was one of the key, kind of a KRA for the company and a key factor. So I will come to the finance domain. What are the key challenges that we faced, during the pandemic when the pandemic has hit us. So one of the biggest challenges in finance that we faced is, the the entire cycle, like we have the accounts payable, accounts receivable functions within finance, and there are multiple uh, functions. So what we see is one was you know the invoice approvals, the invoice payments to the third party vendors, and the collections that we receive from the stockist. So we have a traditional uh, a model, an operating model, wherein the goods are produced, then they are sent to the warehouse, then they are sent to the carry and forwarding agents, to the stockist, and finally to the retailers, which goes out to the final customer. So the one of the biggest challenge that we face is the collections that we were received from the stockist, because the collections, that the traditional model was that we were receiving the checks from the stockist, which was a physical check, which were received by the carry and forwarding agents. So when the pandemic had hit us, so it has actually hit the bottom line, wherein we have seen uh, the collections has gone down, for the first few days. And that was one of the biggest bottleneck that we have faced. Apart from that, we have faced, there were a lot of challenges where we were making the vendor payments, because we had a system of, a manual approval of the invoices and the payment. Okay. And then we were sending the payment advices to the banks for finally executing the payment. So that was the second challenge, that we face. And I will come on to the mitigations and the processes and the changes and the products that we have put in place to to ensure these challenges were met. So this was the second one. Uh, Apart from that, we have also witnessed that there was a huge issue in terms of the supply chain disruption. Okay, because in the pharma industry, we heavily depend upon the freight carriers, the transporters, to deliver the products to the end users. So that is the third challenge that we faced, in terms of delivering the products, um, and so on. So these were the pretty the top three challenges that we faced. So in terms of mitigating these challenges, the first one which we had, the invoice approvals, the payments going out to the third party, because we have to ensure the entire chain, the cycle runs very smoothly, because we have to procure goods from the third party vendors, from our group companies, and we have to ensure the payments go on time. So the first thing that we did is we have put an automation in place, which was the vendor invoice management. So it is a workflow that we have put in place where all the goods that were received at the warehouse or the depots, they have a direct automatic GR. The goods received are done automatically at the depots. Although there were few manual interventions were there, but 80% of the job was automated. So that was the first thing that we did. Okay. Apart from that, when in terms of the invoice processing, because again, the invoice processing happens in a ERP platform, and we have SAP as the ERP. So, again, that was a manual intensive job. And so with the vendor invoice management, what we did is we have actually uh, all the invoices that were received from the third party vendors, those were ingested into the system automatically. There was a OCR in place, the optical character recognition, which used to read the invoices, and finally the invoices were processed with a three-way match process. Okay, so start from the goods received and till the invoice processing, the entire system was put in place. It was a workflow managed, where the invoices were posted with very little exceptions and manual interventions. Okay. So this was one of the area that, with the digital transformation initiative that we have bring in, which has really helped in reducing the effort, the manual interventions, and this has also actually helped in terms of providing greater insights in terms of reporting to the management. That is one. And also it has reduced the error rate of the invoice processing. And finally, the payment to the third party. So this is one of the area that, that we have really focused in. And since our operations is, we have our head office, and then we have different plant finance in different locations across India. So we have actually rolled out this vendor invoice management to all the plant finance team. We have trained them, and now it's been almost a year now. Since last September, we have implemented this, and we have a penetration rate of almost 85 to 90% of the invoices that are being received, which are received at the plant or at the head office. Our purchase order penetration, again, that is something that we have improved, where all the invoices, approximately 95% of the invoices are the PO based, because that actually helps the process of WIM workflow. Okay, so that is another area that we have improved, so that there is no stoppage or a roadblock for the final vendor payment. So this is something that we have done. Apart from that, sorry, anybody has any question?
No.
Okay. Apart from that, in the area of payments, from the traditional model of paying the vendor, by running the payment run in the ERP, and then doing a check payment to the vendor, we have done away with that. We have implemented electronic transfer, eNet procedure, a platform with multiple banks, where all the payments that are uploaded from SAP to this bank portal will work through a workflow system, and the invoice and the payment will be run based on the signature approval limit. So that is something that we have implemented during the pandemic times, to ensure that there is a smooth integration of the payments which are being run in SAP and the payments which are going into the bank. Okay, so this is the second area that we have worked extensively to ensure that there is no supply disruption which happens, because if the vendors are paid properly, they will ensure that the goods are delivered on time. So this is something that we have done from the finance angle. Apart from that, there has been other initiative in terms of the travel and expense management, which we have implemented somewhere last year, mid of last year, where we have implemented the Concur tool, which actually, again, this is a kind of a workflow that we have implemented, wherein all the travel and expenses which are being expensed by the employees are completely paperless. Okay, there is no need to submit the hard copy of the invoices to the finance team. They can directly upload it in the workflow in the Concur tool, which goes through a multiple layers of approval, and finally it goes to the finance team for a final check and for final release of payment. Just to mention, we have integrated the Concur with SAP, so all the submissions made by the employees in the expense tool directly flow into SAP, and the accounting entry happens automatically. Okay, so that is the beauty of it. Apart from that, it also gives a very good insight to the management in terms of the reporting, a deep insight in terms of which department is expensing on a monthly basis, what is the travel and expense trend, by cost center, by business area, by plant. So we have actually seen with this data analysis over a 6 to 8 months, which was presented to the management, we have seen now with the pandemic, we have reduced the travels, to be very honest, not just because of pandemic, but because of implementing this tool, this has actually given a very deeper insight to the management that we can actually do a cost rationalization. So
very interesting.
yeah, something, so, and to be very honest, we are continuously thinking it loud uh, to ensure that these continuous improvements are being put in place, in uh, either in small or in a bigger fashion. That is one. The other thing, we have just started off very recently, and in fact, I'm leading that initiative for finance, is the robotic process automation uh,
Mhm.
initiative. So, because digital transformation is a buzzword and it has been RPA, if we have seen that many companies are implementing robotics, especially, which are low hanging fruits, the transactional jobs, okay, where it's a no brainer. Okay. So uh, we have actually prepared a complete roadmap for the next couple of years, and we have actually listed down all the processes within different areas of finance, let's say accounts payable, receivable, the taxation, the financial planning and analysis, and we have actually called out the different activities which we can actually target in the next 2 years, and which will actually really, it will drive efficiency on one side, and the other side is actually benefit the employees to really upskill. Okay. Which I feel, and because to be very honest, if you really look at the pharma industry, the average tenure of any employee is around 7 to 8 years. Okay. And the industry which I came from the shared service, the average tenure is around 2 to 3 years. uh, so uh, the the employees tend to stay with the company for a longer time, and you know and it is very important that the employees are upskilled. So I think robotic process automation has really helped open the eyes to all the employees, to the organization. And since we have started off this initiative with like 4 to 5 processes to start with, and so, but we will scale up very huge in the next in 2022. We have a huge laundry list that we are planning to you know
Automate now.
yeah.
Yeah, no,
So
no, very interesting, very interesting. So,
so so digital, and we are actually leveraging this digital not just in finance. We are planning to leverage, let's say, in supply chain,
so
procurement.
we'll come back,
Yeah.
Mr. Dasgupta, to these newer technologies and the other impacts it has had. Meanwhile, let's hear from the other panelists. Ms. Jaisinghani, if you can tell us, you come from a traditional bank, that what are the unique kind of requests you got from your customers that this is what we need, and how did you help them? Because both pharma and banking were two industries which
Leveraging other initiatives like to how to improve the customer experience per se. Okay, let's say we are also I'm sorry.
actually I was asking Ms. Jaisinghani, Tina ji.
Sorry, anybody has any question? I'm sorry, I didn't.
Yeah. The question was for Ms. Tina.
Yeah.
Hi, thank you for that question. So, very quickly, before I sort of get into the challenges that we faced and how did we emerge from them, I'll take a couple of seconds to sort of highlight how this particular pandemic has been different from the previous pandemics, or rather, not pandemic, economic crisis, if I may say. That will be more relevant for this finance panel. There is a very distinct human angle involved this time around, wherein there is not just loss of livelihoods. We are talking about loss of lives. As we see the pandemic progress, and that's one thing that I thought posed a very big challenge, wherein you were expecting people to work and deal with their personal issues, challenges that families were facing, wherein we were forced to make everyone work from home. So as a bank, we have very strict security protocols which require us to have specific, logging in, logging out, sensitive information, sensitive data. A key challenge that we faced was, how do we step out of this traditional office environment wherein people swipe in and swipe out, and it's a safe world, everything is secure, you're dealing with people's money, their trust. We quickly created work from home environments using technology, and at the same time we also were faced with regulatory concerns around making sure that the customers are being served, using our staff in the most, streamlined manner. Um, you know, it led to making sure that, ongoing audit processes are being adhered to, clients are being serviced, for example, retail customers. How do you make sure that there is, eKYC initiatives happening, stuff like making sure that there is proper credit, analysis happening amidst an environment where past data is not relevant anymore. You are talking about a pandemic which has impacted sectors very differently. Like Sandeep mentioned, he comes from a pharma space. Pharma did very well relatively. IT, ITES, fintechs, IT-enabled education did very well. But on the other hand, hospitality, hotels, airlines, they collapsed. So we were faced with a challenge of making sure that we don't look at all clients with the same lens. One size does not fit everyone. We make sure that we are robust to service our clients in a timely manner, and at the same time adhere to regulations, guidelines, and expectations of regulators to make sure that it's a win-win for everyone. Technology was a huge savior for us. We introduced, client servicing on a online basis, wherein we were able to make sure that cash management, transaction management, retail services, they're all on track. And at the same time, there's empathy for our clients, understanding what they need, and keep track on our asset quality. So yeah, I would say that a timely reaction from regulators, from banks in supporting clients was key for us. I'll come to other areas on innovations and stuff, rather than taking screen time entirely here, and pass this on to the next speaker.
Okay, so we'll come back to the innovations because that's something I think all of us would be very keen on hearing. So we'll come back to that. So maybe we can move on to Mr. Nehra, that how has your business been affected by the pandemic and how you have dealt with it?
Thank you very much, Preeti, for taking me on this panel, and thank you very much. I would actually like to make this session actually more interactive because that's where the kids would learn. But to give you a very nutshell, actually, this pandemic has been a blessing in disguise for us in the banking industry, especially in the emerging markets. That's where I work. I'm based out of Nairobi and I manage Africa and even places like India. And all of you would have realized that how things like PaisaPay and Paytm, etc., have picked up. In fact, Paytm has become kind of a role model for the global payments industry. I was in Egypt, and the Egyptian Central Bank was in the process of launching a PSP kind of a thing, which is very similar. And what they told me that they've just gone to India and they started the Paytm model and they picked the whole skeleton and placed it there. And especially for emerging markets where you have a whole lot of these customers who are financially excluded and you want to include them financially. This has been a blessing in disguise. And I sit down in a market which has been kind of a role model for payments where M-Pesa works. And I'd like to share with you guys, it's amazing that since the day I have come in here, or maybe 2 days, 3 days from then, I have not handled a single cash note in my hand. It's everything on my M-Pesa, right from paying my taxi driver to paying my maid, to paying my DSTV bills, to paying my electricity bill. Everything is just on M-Pesa. So it's so as virtual as that. So, and pandemic has fast-tracked this process of digitization. I was involved with a project with the Central Bank of Ethiopia about 6-8 months back, where they wanted the rails of the remittances coming in from the Ethiopian diaspora to be digitized, right? And also it has benefited the customers in a way that, especially most of the emerging markets, even otherwise, the cost of brick and mortar branches, right, can be hugely, a brick and mortar branch can be in any market, and especially in the emerging markets can be very expensive because you have the cost of real estate, networks, people, electricity, generators, security. So, and where does that cost come from? That ultimately that cost is borne by the consumer, right? So as you work towards digitizing some of these processes, the consumers benefit. So it's got a twofold thing where you are now able to, by digitizing, right? Because you were literally forced to digitize in the pandemic time. So one, you are able to financially include a lot of financially excluded customers who were not able to, who first you didn't want them in your branches. And secondly, because of various reasons, they didn't want to open accounts, right? And secondly, you've been able to pass on the benefits, some of the benefits of that cost, right, to these consumers, right? The M-Pesa transactions are so easy because there is no branch, there is no teller, there's nothing. Everything is on your phone, you're transferring it to your maid. Hence, there is no cost involved to it. And hence, who benefits? The consumer benefits, right? And the third benefit of it, which has really been also amazing, is that you are today able to capture a lot of intelligent data, right? And data is anyway the next gold, right? You're able to capture that data. And I'll give you an hypothetical example, a couple of them, is that one, for example, earlier, say a Nigerian or an Ethiopian diaspora is working in Europe, in Paris or in New York or wherever, and he's sending $1,000 every month to his wife in Kenya or in Nigeria or Ethiopia, wherever, right? Now, when this process is done manually, he goes to, some kiosk and he picks up his money. You're not able to capture that data very successfully or very authentically. But today, when you digitize it and it comes to his M-Pesa rail, right? You're able to capture that data. 3 months or 6 months or 1 year down the line, so the guy wants a mortgage of $20,000 for his wife to build a home in his home state in Nairobi or in in Addis, right? You can use that as a surrogate income for him and say, yeah, this is like this guy having a salary or his wife having a salary of $1,000 a month, and hence I am very safely able to give him or her a mortgage. And there is so much more data around it. When you're doing these M-Pesa transactions, today when I'm doing an M-Pesa transaction or any digital transaction or a Paytm transaction or anything, you're able to capture that data and build a credit history of a customer around that, and hence able to lend to him and do a lot of other things with him. So actually there's, it's been a boon for us as a banking industry, for a customer. And, there has been a paradigm shift in the whole thing. So my earlier employer, for example, EcoBank, used to have 1,500 branches in Africa at one point of time, right? They started scaling down branches. Today, they are down to about 800 branches. So they are almost in about last 28 months, they're down to 50% of their branches or 60% of their branches. And hence, their profitability has gone up, they've passed on the benefits per customer, and they've become more sleeker in their approach towards the customer because, it's all data driven. So not taking too much of a time, I would welcome some questions at a later stage. But I'll that's my take on the pandemic, and I'll pass it on to the next speaker.
Very, very, very interesting thoughts, and I think M-Pesa is something which has inspired a lot of nations to actually build the mobile money platforms, and
Right.
being the pioneer there, so that is definitely there, and you're in the thick of it. Very interesting. So you have to leave in half an hour, you've written. So if any students have any questions for Mr. Nehra, if they can start posting. So as and when we have the questions, we can pose it to him. We will not wait till the end, because typically what we do is we have the questions in the end. So we'll wait.
My apologies. I have I've rushed for a meeting.
No, that's okay. I'm glad you told us, so that if in case any students have any questions, while we are talking to the others in between, we'll see the questions for you then.
Absolutely. Yeah.
So very interesting thoughts. Mr. Nagpal, if we can move on to you and understand what your thoughts are on how your organization has dealt with this.
Surely. So we're starting with challenges, right? So I think as a leader, and leader is irrespective of the organization title you hold. A new joiner can be a leader in the team too. The biggest challenge that leaders were faced with or were thrown was to predict the future. Correct. As and when the pandemic hit, everybody asked, what will happen? How does it look like? How long? Is it true? How will we do it? All these kind of questions were coming. And I think the biggest challenge was to predict the future. So I'll tell you, I changed a job in the middle of pandemic and cities. So I relocated from Delhi, Gurgaon to Bangalore, which is my current location now. But one thing that we all completely kind of synced up with is we all said that the best way to predict your future is to create it. Correct? Mm-hmm. And the biggest challenge, irrespective whether we are finance professionals, HR professionals, is first we are humans. And the thing was to protect lives. So empathy was the core thing in every decision that we took. And it may not come very naturally when people are dealing with numbers, because budgets are budgets, right? And then the emotion is out of the numbers. But the biggest paradigm shift that at least we saw as leaders, and I was leading the finance, risk and regulatory function in my previous organization, which was NatWest Bank, was to quickly change the direction. Yeah, and all of us have been through it. Now, in fact, when we look back, we call it as our success that within 2-3 days, all laptops were deployed into 3,000 locations. We were working out of India from 3 locations. Suddenly, people moved back to their hometowns and there became 3,000 locations. How do you ship them, equip them, etc., etc.? But that was, I think, a minor challenge now that we look back behind our backs and say we conquered. So that was one biggest challenge that we overcame very quickly. But the more important was aligning right from leadership positions to the board and presenting a common joint view. Everyone was in it together worldwide, and people took very fast decisions. And from Mr. Nehra, I would say it was a blessing in disguise. In my 25 years of experience, I have not seen decisions being made as fast as we saw in the last 2 years. So that was one. And of course, digitization, etc., which is the next agenda item we will anyway speak to, as you've been alluding to. But these are the core things that I think we personally saw. As a human being, as a person, as a parent, I think the biggest challenge I saw was seeing my 7-year-old quickly move from school to an online class, and actually surprising everybody that children are so resilient and so adaptive to change. So they could do it pretty fast. Yeah, so that's it. And yes, moving in the middle of the pandemic to a new location. I'll probably talk about it later during the conversation, but thank you.
No, that's very interesting. I like the way you said the best way to predict your future is to create it. That's fantastic, because otherwise everything, I mean, one thing that is certain about the future is that it's uncertain. So the only way you can make it certain is by creating it. I really like that. So there was one question which I think Abhinav has answered. So we can move on then. So finally, we come to you, Mr. Tiwari. you're in the thick of the payment world as well. So I'm sure, you know, things were, you were probably one of the industries which probably saw some positives out of this whole thing.
Sure. Thanks. So I belong to the fintech world, and more specifically, Dr. Preeti, the micro and the small medium enterprises lending, which is typically called retail lending, and now part of the payments company. But since we are talking about the COVID times, let me try to paint a picture of what the domestic lenders were facing at that point of time, not specific to any specific organization that I'm talking about. Beginning the pandemic, the economy came to a halt suddenly, right? And what it exposed, especially to the BFSI industry, was the total unpreparedness of digital shift, as you may call it, right? We all have BCP, business continuity plans in all organizations, but that business continuity plan is for moving from a physical location to another physical location. Nobody, there could be a BCP for a physical world to a totally remote world. And hence, most of the speakers have spoken about, the first challenge was to how do you actually ensure that the employees shift to their safe environments and start their work as soon as possible without facing any challenges. And hence, the first challenge was to provide the right infrastructure. Obviously, speakers have spoken about empathy, people have spoken about work from home challenges, deeper into it. But that was the first internal challenge that we faced as a BFSI world. But let me go now straight to the external environment. And the external environment was facing a lot of things happening at the same time. There was a regulatory intervention of something called moratorium, which got extended from Morat 1 to Morat 2. And since we're talking about moratorium, let me give you a very interesting point about moratorium and that's actually happened on the ground. There is no easily understandable Hindi equivalent of a word moratorium. Oh. The most understood word for moratorium is maafi, which actually is waiver and not a moratorium. Right? And hence the biggest challenge we lenders faced was to first of all educate the customer that it's not actually a waiver, it's actually a deferment of the payment obligation. And so in that sense, the biggest challenge all lenders faced was customer engagement and customer communication above everything else during the pandemic. Let me try to also give you another few challenges that we were facing. The priority of being to a financial lender. I mean, every one of us, right? First of all, the priority became family. Then for an SME, how does he or she, try to protect the business? Then his or her labor, overheads, and then EMI obligation maybe came down the priorities list. That was the second challenge. The third challenge was the entire economy went into a cash conservation mode. Everybody wanted to save money, keep cash with them, and hence discretionary spend went down. EMI payments also saw a blip. Collections strategy took a big hit because you couldn't actually reach out to customers physically because of the lockdown, and also digitally because there's an industry statistic which says that about 60 to 65% of the customers were only contactable during the pandemic, which means that 30 to 35% of the customers could not even be contacted for nudging for payments. So these challenges actually posed a real strategic problem on the ground. The kind of customer engagement problem that I spoke about, it's also important to understand that the frontline people who are there engaging with customers every day in, day out, it was very important for them to also be educated about treating and talking to the customers differently, because it was not the same customer who was not paying you who is under moratorium now. He could be a well-paying customer who's under moratorium. So now how do you actually speak to a normal paying customer? So the whole tonality and the whole script of the customer conversation changes. And hence another employee related challenge which the industry faced was how do you actually reskill the front line, right from the first level of defense to the third level of defense, and treating them and talking to them continuously with empathy, with understanding, with being able to explain them the regulatory environment and what is good and what is best for them. So I think with all these challenges. Obviously, the industry has come out of it now, and if the Omicron thing does not again shape up, but from a lender retail risk management point of view, I think the COVID time, the first 3 months especially, I think were a risk manager's nightmare, if I may call it. That was my short perspective of how we saw things.
So no, very interesting. And what it seems like is, no matter which industry you talk about, if there is a human side to this pandemic, whether it is you look at the marketing side, whether you look at operations, you look at finance, ultimately, it is about the human side of how organizations dealt with it. And so that seems to be the very, very common theme across all the panels discussions that I've seen throughout Sapience. But very interesting perspective, and so I'm sure a lot of innovations have come out of this. So you're looking at the credit policy. Have you had to create new policies or make changes to it? So maybe we'll look at the innovations, and we'll start with you, Mr. Tiwari.
Sure, thanks. Yes, so I think as a lender and as a risk professional, the first challenge was how do we first of all take care of our existing book, and how do we actually ensure that we also at the same time do new acquisitions, which means new customers onboarding. Obviously, COVID was not the time to be adventurous from any point of view, and hence, when we were looking at new acquisitions, it was a big challenge for us to actually look out for industries and segments which were actually doing well as compared to other sectors. We all know of the pharma supply chain, the agri supply chain, were actually doing well. But just to give an instance, right, the very definition of essentials changed during pandemic, right? It was no more only groceries and medicines. When all of us were working from home, things like gym equipments, stationery, computer peripherals, all those things that were needed to work effectively from home, health-related products, all were selling largely on e-commerce platforms. And hence there were a certain chunk of sellers who were actually doing really well in the pandemic time, because the whole definition of essentials changed from a consumer point of view. So these are the kind of green shoots which we were looking out for, and we developed specific policies and programs for these kind of specific cohorts which we could lend to, based on the transactional data that we observed. But let me tell you one interesting point is that given the fact that the pandemic period had a period where customers had reduced on discretionary spending, which means your credit lines were utilized less and less, typically almost all borrowers had good bureau scores. There was a regulation from the regulator as well, not to differentiate borrowers who have taken a moratorium versus a borrower who has not taken a moratorium. And hence, the same was not getting reported to bureaus. And hence, another challenge was actually how do you actually define is, because a bureau input is a very critical part of the whole credit assessment process. So that's the challenge bit, and how do we actually go after new acquisitions. Coming to the existing book and how did we try to manage the risk there, and in terms of how do we manage the whole portfolio, I think customer segmentation went to a very, very deep level. Initially, when we talk about collections, the segmentation is primarily in basis buckets, bucket 1, bucket 2, 3, meaning the number of days customer is delinquent for, or maybe the large exposures, basis the exposures, right? But typically in the time of COVID, the customer segmentation through analytics went very deep. You actually had to bucket and cohort your customers, which means that you actually segment your portfolio basis industry, basis product, basis profile, basis geographical expanse, because geographical was important because you had this COVID containment zones as well, red, orange, and green cohorts changing every time. And basis that, come up with a risk matrix which could segment customers into low, medium, high kind of a bucket, and then develop your collection strategies basis those cohorts. What would be the intensity of the collection follow-ups? What would the frequency of the collection follow-ups with customers? What would be the channels of communication that we would adopt? Would all depend on these risk metrics basis which you would try to handle the customers. And hence, primarily analytics aided by technology took a forefront as far as managing the existing book is concerned. And I think that reaped huge benefits because all the customers were not the same, while they might have still taken the moratorium. And hence it was very difficult to go very granular and understand the customer behavior and manage risk there. That's how we approached from a lending point of view.
Nice. No, very, very interesting. And, I always tell my students that finance function is kind of at the heart of everything in the business. So we've heard this, some lot of marketing here, and we'll keep hearing about all the other functions as well, because finally it is about all that, the business is a business. And so I know, Mr. Nehra, you to leave. So if we can hear from you on any new products that emerged out of the pandemic for your organization, any other innovations in terms of business models or business processes or products?
No, I think Ashutosh has said all in terms of, as far as the banking and the lending products are concerned. And I've already spoken about how some of these things, have got digitized. In fact, when we speak about the human angle to it, so even organizations as large as a MasterCard or Visa, right, have been doing a lot of work to handhold the SMEs, especially in the emerging markets, because this is the segment which was directly impacted, right? Because SMEs were the ones who just couldn't cope up with it, and their cash flows kind of folded in very quickly. So you had to figure out now, how do I handhold these SME, this SME portfolio of mine. So, as Ashutosh said, so you have to literally segregate each geographical area, each cohort, each type of a customer, right? Corporates separate from an SME, and large corporates being different, right? And then manage these portfolios. So the pandemic kind of fast track your process in terms of put a human angle to it, and fast track your process of how you go deeper to figure out how to handle which customers.
Mm-hmm.
And in some cases, like some of the digital banking books, in some places, like I know of a particular bank called Amar Bank in Indonesia, which really blossomed during the pandemic, and because they do this small ticket lending, right? And the customers, they wanted to take, it helped them acquire a new book, and it helped. It also put in a fear of God in some of these customers, because it's a faith-driven economy. Indonesia is a very faith-driven economy, so it put a fear of God in these guys and said, no, we need to pay back, because these are the guys who helped us, during our bad times, and hence we need to make sure that we develop or maintain our credit scores with this bank. And that bank really succeeded. And I have similar examples in places like Mexico, in Brazil, even to some extent in Africa.
Very interesting. And Ms. Jaisinghani, you were mentioning about some innovations that your bank had done at this time, and I'm sure you would have had many requests from many customers for all kinds of things, and that would have put in place some innovation, something different in terms of processes or products, or maybe even a brand new business model.
Sure. Like Ashutosh mentioned earlier, the fact was that we had to look at credit very differently. We had to look at a customer who was bruised and hurt with the crisis, and at the same time, the age-old process of backward-looking data and relying on 6 to 12 months of data and saying that this is what I think the future is going to be like. That was a challenge. So what we did was that we looked at probability of default based on recovery trajectory of various sectors differently, rather than saying that this is how this is going to look 6 months from now or 12 months from now. Data analytics really helped us with doing stuff a little more real time. And of course, technology helped us. It was actually surprising that in the past, you were not so close to the customer real time on a real time basis compared to now. And, you know, you were getting inputs from clients every week, every fortnight on how things are looking like. And, you know, with subsequent waves of the virus coming in, the impact on supply chain, you know, a particular company which is, say, procuring from a certain country, you know, may face some recoveries from certain vendors and may face challenges from others. So we were actually looking at sector specific and company specific recovery trajectories, and then trying to understand how would the future look like. You know, the thing about banking is that you want to lend to people who can afford to pay back, and you have to pause and think about a strategy to save the quality of your book. And like Ashutosh mentioned, is there a mirror to see how does the future look like and where can I grow the book? So I think you know, the digital part of things, where we were looking at recoveries very closely, analytics were real time. You know, that's on the credit piece. On the product side, we were able to streamline our transaction management very well. Cash management services were strengthened because of the challenges of lockdowns, of the, you know, and then like I mentioned earlier on, you know, eKYCs were introduced. We were able to improve on turnaround times, you know, despite the crisis, because we sort of acknowledge that this is it. This is where our customers need our help, especially the retail customers. Like somebody in the panel mentioned, you know, cash conservation, you know, seemed to be, you know, the mindset as far as customers were concerned. So yeah, I think I did mention on the, you know, streamlining of audit processes early on. So that's pretty much from my end.
Okay. Mr. Nagpal.
Thank you. I think few innovations, if I can call it innovations, in terms of a business process redesign is also extremely critical, not to ignore just, of course, the silver lining of digitization that actually happened. So I'll give you one example. In my new organization, we hired more than 500 people during the pandemic. So as you could see, there were many organizations, unfortunately, who were letting go people. So one would imagine that, okay, now the market is actually flooded with talent. So it's an easy kill to quickly hire people in an organization which is being set up. But when you get to it, you realize how difficult it was even for a CFO organization to, one, assess the right talent in the market. Second, how do you onboard them? Where do you onboard them? Correct? And then what are the compliance rules, etc., policies that you'll have to still abide by and make sure the person actually walks in the door? That was a big challenge. On the other side, if you do not have people, you do not have revenue, because obviously you can't do client work. So that was very, very critical to get that redesign of virtual onboarding, making sure people actually land where they need to land, feeling that yes, they are equipped, giving them the right tools and techniques to perform in their job and make them successful. That was very, very key. But I like the word of Hindi, Maafi, that Ashutosh used, which was moratorium. Now, in my previous role with NatWest, I was right at the end of the food chain. So all the jazzy stuff that actually Ashutosh did and Tina did in credit market, I had actually to report it to the regulator, right? So there was hardly any guideline available from the regulator of how do you treat this? Where do you classify it? What will be the disclosure? What pandemic didn't help is the collaboration, because if you were in a room with 5 people, probably you could come up quickly with an answer. But this meant one person's internet not working, like mine was not working just before the, this meeting started, and I had a minor blip of my pulse rate going high. But yeah, so that was really the challenge. Okay, what is the solution that you get to the table? And if you regulate wrong, will you be penalized as a bank? Second thing is, NatWest as an organization had already started closing branches in UK and Scotland. And we were being pelted with stones, honestly, in that market. Why? Because people use branch as a way to form relationships and to go to their branch and speak with people if they have no banking transaction also. Asking that audience to now move to a digital platform, actually the pandemic helped us because everybody was kind of home island. That's where they were operating with. And sooner than later, we realized the number of branches we closed, we actually moved to a digital platform and our reach became far better. So that's where I think it helped. And obviously, you have to completely redesign the way you can think a relationship can actually be done over a digital platform. So that was the module that you developed. Second, new products came in the offering. So earlier, when you do a mortgage, let's say if your baseline was to close the mortgage deal in 30 days and report it to the regulator, because of this process redesign and digitization, now you could do it in less than 7 days and yet be compliant. So that I personally believe, being involved in the project and the challenges we saw and the quick decision making that we saw was brilliant. I don't think in my experience I would have been privy to that kind of a situation. So that was really, really welcoming. Those are few things. One other thing from a employee who's joining a new company, there's already an apprehension what it will look like. The biggest innovation in my terms, while we may agree or disagree to call it as innovation, is quickly getting to understand the culture of the organization. How do you make that happen? What is the purpose that you are communicated with, purpose of the organization and your own internal values, and do they align? Correct? And that you kind of can't foresee in a 1 hour or a 5 rounds interview. That actually happens when you hit the floor. And this, you're not even hitting the floor, you're still in your room, at your home, in your comfort.
Yeah.
So that open, transparent communication as a CFO organization and as a leader was primarily the biggest thing I would call as an innovation, getting everybody aligned. So I'll stop there. I'm sure there will be more questions coming along.
No, that's very interesting, because that was one thought which I had, and that is also the theme of Sapience this year, that that the purpose, did any of the organizations actually go back and relook at what is the purpose of why we are in business and what we are here to deliver. So maybe we'll come back to that. Before that, let's hear from Mr. Das Gupta, like what were, I think he's already spoken a fair bit about some of the innovations. So anything more you would like to add to that? You're on mute, I think.
Hey, I'm sorry. So I was saying that, yeah, I touched upon the point of like the robotic process automation and, the supply disruption and the kind of workflows that we have implemented to tide over the challenges that we faced during pandemic. So what I feel is, and that, digital transformation is one of the key agenda that we are driving in our organization. Collectively, and finance is at the center stage to initiate and take it to closure. So that is one. We have a clear roadmap, and what I understand and what we feel is that there are three things that we are really focusing on as an organization. One is that we need to streamline the financial and the accounting operations. That is one. And the way we are doing it is by digitizing the operation for the future growths, okay? Because we need talent and skill with the existing people who can fuel the growth of the company. We want the staffs, the employees, moving from the swivel chair to wear the hat of a creative and a strategic partner. So for that, we are retooling, we are, remodeling our operations so that the employees who are there in the organization for many years can take up bigger jobs. And that is the reason we are driving this digital roadmap. It is not just implementing the digital tools and workflows and all this stuff, but it is actually bringing a culture within the organization, in the finance organization. So that is imperative, which has been laid down by our CFO. So that is one. Apart from that, the second point is how we can minimize the risk, the financial risk, in the finance domain. So that is something that we are critically reviewing and working with the big fours as well, to understand and to ensure that we do not face any challenges in terms of any regulatory or compliance challenges, risk, and how we can imbibe those regulatory and the control framework within our digital platform. So that is something that we are working very closely, and to ensure that we have a very strong and robust controls and compliance procedures. So this is the second. The last one I want to talk about is on the data, because data is a gold mine, which for at least for our sector, because that is where we get our insights, the deep analytics that we do, and we future and predict what will be there in the future. So we have also implementing kind of a data visualization strategy and techniques, where we will have the data directly coming from the ERP, where it should give a deeper analytics and dynamic reporting to the management for better decision making. So these are the few things that we are working on as an organization, and I think uh, irrespective of if there is a pandemic or not, I think this will help any organization, if we focus on these area, which is our base or basics. So it is not just cost saving, it is not just optimization, it is improved business resilience and better insights and lowering the risk. So I think these are the keywords which I want to leave with. Yeah.
Okay. So that's all very interesting, and it's I'm sure a lot of these new practices that have come out, new products that have come out, new processes, new, like you mentioned, Ms. Das Gupta, that you've implemented these systems across the organization and other locations as well. So do you think that a lot of these innovations are now here to stay in the organization, and it is going to fast track the digitization of processes within the organization?
Yeah, it is, because so we have just started, as I said, it's been 3 to 4 months now, and we have a plan to scale it up, and that is one. And also we are planning to bring some economies of scale in terms of by doing a centralization, because as I said, our finances, it is currently decentralized across different regions and plants. So we are also planning to decentralize that processes and operation, to bring it under one umbrella, to work as a shared service unit, so that it gives a better compliance, control, efficiency, and improved business resilience. So that is something that we are planning to do as well, apart from just running the digital ops.
Yeah. So so I'm sure all the other organizations also, this has led to some newer insights, because of which this certain newer, smaller business models or newer ideas have come. So Mr. Nagpal, what is your thought on that?
As you can see, it takes me a while just to unmute. Sorry, if you could
Still
just please.
technology has been I'm saying, so many new things have happened. So many things have been fast tracked because of the pandemic. So which of these are here to stay, one? And second, any newer ideas have come as to how you're going to approach few things in the future, or anything that you foresee which has been as a result of this pandemic, which is going to help the business?
Okay, surely. So if you look at the latest PwC survey that was out in December, which is now, it says 83% of the employers feel that work from home has actually worked, and 73 or 76% of actually employees feel that yes, it has worked. So I don't think this concept of only working from office or only working from home is something that will stay. It will always and always be a hybrid model. Yes, of course, there are some roles which will be full front facing and requires an individual to be at the location facing the client. That will actually continue to be a full-time in the office kind of a job. So that's something which will not change. What will also not change is the aptitude and the ability and the willingness of the CFO organization to invest in technology, and especially these digitization, visualization tools, and building training curriculums within the organization and spending money for it rather than buying it from outside. The future skill that you see of the talent workforce, which will emerge initially 5 years, but then overall on a longer term, 10 to 15 years, every person, whether it's a risk professional, finance professional, regulatory, HR, no matter whom you call it, will need to know these digitization and these particular tool sets. It's become part of your MS suite of applications. It will become. So those things will continue to stay. New things, in my view, at least from the organization that I can represent and speak of, we have a lot of proprietary technology. And the more we speak to our clients, we realize what their understanding and needs are. And sometimes they don't even know the need. We create the need for them. So those kind of products will always and always continue to develop. I'll give you one very small example. The need for private equity funds, correct? And the need for that data granularity, which never existed pre-pandemic, has suddenly started to emerge in the market. That yes, we need exact detail, ground level detail, even the related counterparties that have invested, not necessarily just the name that you see as an investor. All of those things become a lot more, I would say, as requirements, what their backgrounds are, their screening, their profiling, etc., etc. That I think as a proprietary technology, many organizations have already started to think about and are starting to build. And of course, all of this digitization words that we've been using so long in this meeting and in this conversation, these are only going to augment that. I'll just close probably this particular last statement by saying the 3 T's, the flavor of teas will continue. And these 3 T's I call as transformation, talent, and training. So irrespective pandemic or not pandemic, these will continue. We'll continue to have these 3 flavors.
It comes back to the human angle again. So Ms. Jaisinghani, what is your thought on this? Do you think you will continue with that, given you're a traditional bank, you will continue with that work from home model, or you will reverse some of the changes that have happened during this time, or which of these things are here to stay and which are probably going to go back to the old way?
Sure. So I think one thing is very clear, that the way we thought is the right way to engage with our clients, you have to physically meet them. And I think the way we look at relationships with our clients has definitely changed, and it is going to stay that way. And I'm not saying that in a negative way. I would say, surprisingly, the clients feel a lot more connected to us now than they were in the past. So that engagement with the client will change forever. Secondly, the need for capital adequacy cannot be underscored enough. And this crisis actually did go on to reinforce the fact that, after the global financial crisis, banks were, relatively better capitalized thanks to the regulations that came in. And I would say that cushion came in handy in maintaining that asset quality. So the banks will continue to be robust about capital adequacy. Then, the stress testing, the way we knew it, has changed forever. And it's not like we're going to close our boxes and put it in the cupboard saying, "Ho gaya pandemic, enough of stress testing." I think the way we look at stress testing has gotten robust. We are going to always think about it. What if the world halts tomorrow? That will always be one of the scenarios, in future, whenever we look at a potential client and a potential funding. Coming to work from home, I think it is going to be hybrid. I think we have successfully proven that there is no need to, travel unless it's very necessary. We have been able to sustain businesses with minimized travel. I think that is going to stay. A good example is this webinar that we are currently talking. We are in different locations and it's a great discussion. I think this is going to stay. And as far as, the employees are concerned, I think this pandemic has given them an opportunity to connect with what they have been wanting to do and pursue for many years. And they finally got a chance, that half an hour extra in a day. I think that is a welcome change. And, I think it's going to be hybrid. It's not like people are going to sit at home forever. It's not like it's going to be 7 days or whatever, 5 days back to that model. I think there are clear benefits of, meeting the team, brainstorming together in an office environment. That's important, and that is going to, come back to a certain level. And the positives of, working from home will stay. So yeah, I think there have been blessings from the pandemic. Some have been lucky, some have not been so lucky in terms of faiths, business, lives. We have a lot to be grateful about. So I would just end on the note that it's important to sort of take those learnings in our stride and move forward and continue to work on robustness of processes. Yeah, that's it from my end.
Yeah, and it's like another panelist also mentioned that business continuity planning is going to change forever now. It's as like what you mentioned, that if the world was to stop tomorrow, and the way we have seen business continuity planning is not going to remain the same anymore. It's probably organizations are going to relook at that altogether, that what new things need to be added today to make sure that even if the world comes to a halt tomorrow, we are able to do our business. And technology is certainly going to be a big lifesaver in that. Mr. Tiwari, anything you would like to add to that?
Sure. I think panelists have spoken really. I think I agree to them. Work from home, hybrid work model is a reality. But as far as digital transformation is concerned, I have a slightly different view. And there I quote somebody called Mr. Chris Skrinner, who is a very renowned fintech influencer. And this is good to for us to absorb. He says, and that's very contextual, is that there's a difference between being digital and doing digital. For organizations to survive, for the expectations of the changing digital native, it's important for all organizations, especially the finance functions, lending functions, risk management functions, to be digital by DNA, rather than do incremental things in digital transformation. Right? The whole process and the thought process has to be a digital DNA to serve the customer of tomorrow, especially in the lending context. the whole experience is changing from a borrowing experience to a buying experience now. And that you can only serve when you think digital and when you are digital by true DNA, not just doing incremental things by way of digital transformation. I think that DNA whole thought process, the whole management concept of digital transformation needs to change to serve the customer of tomorrow, to serve the employee of tomorrow. I think that's very crucial in my view.
And do you think organizations are beginning to do that?
Yes, so I think if you look at the whole ecosystem, how it's evolving, fintechs, if you look at fintechs for the traditional setups, there's a huge debate anyways going around. Fintechs by DNA, in my view, are digital by DNA, right? Because they were born. Whereas moving the current infra to cloud is a different thing. Being cloud is a different thing, as again, the fintech influencer whom I quoted said that, right? So I think this whole agility towards servicing of customer, whole agility towards being purpose driven to serve his need.
Yeah.
And if he is transforming himself to be a digital native, it's imperative for us to be digital so that we serve him better.
Right.
I think that's what my closing comments would be.
No, very, 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 and you've linked it very well to the topic that we have, that purposeful businesses, that businesses need to keep that in mind, because what is their purpose? They have to fulfill the needs of the customer finally. No, I think very, very, very insightful views from all the panelists. So here we are running out of time. So I would like to hand back to the MCs Naman and Garima to take it forward. But my personal thanks to each and every one of you for very, very insightful and interesting views. Naman, Garima.
Thank you so much, ma'am. Thank you to all the panelists. I invite Professor VP Singh to deliver a vote of thanks. Over to you, sir.
Thank you so much. It was indeed a pleasure listening to various innovations that each panel member had to talk about. So there were a lot of new initiatives being taken by each of the company which has been represented here on the panel, but there is certain common thread within each one of them. I would reiterate that for the benefit of our students. So we see that the pandemic has given a unique situation, and hence the past data couldn't be used much for any future decision making. As brought out by Ms. Tina Jaisinghani, this lack of past data brought higher cohesiveness in the systems, bringing real-time data into practice and closer relationships with the customers. Mr. Vinit Nagpal also emphasized on something similar, as they said that the best way to predict the future is by creating it. It is a fantastic line. And that also means that if we cannot rely on the past data, that means we need to make much more effort in the present in order to create the future which we want, which is desirable. And indeed, he says that the flavor of the 3 T's, the transformation, the talent, and the training is going to stay. So largely, we all have to be very, very open to transformation, and of course, to reskill the talent. And this very thing, which Mr. Vinit Nagpal has talked about, this I see is coming through what Mr. Ashutosh Tiwari talked about, business continuity plans, not actually being able to look at this, being able to provide solutions for this pandemic. This was so different. So the business continuity plans, which in future we are going to have, that will also try to bring more openness and more willingness of the people of the existing system towards the transformation. And the stress testing, which has been achieved during this period, this is remarkable. This is where we see that despite there was a lot of problems with this pandemic, but a lot of optimism seems to be seeping through. Mr. Sandeep Das Gupta has talked about the various activities which their organization did in terms of the digital transformation and RPA, and which is bringing much more efficiencies. This particular aspect is going to bring in so much of delight to the economy, because if there are efficiencies, this is what we want throughout, and especially in India, where otherwise things were cheap, but the processes, if more of automation is adopted, more of IT technologies are adopted, definitely, and better real-time data is used and analyzed, we will reap in so much of efficiencies. And overall, as Mr. Abhinav Nehra has mentioned, that this pandemic came out to be a blessing in disguise, as it has fast-tracked the process of digitization and has created credit history for people who didn't have any. This will facilitate lending process by evaluating the right kind of risks. So overall, we see that a lot of pluses have been created, have been brought out for the world through this pandemic. And I totally agree, and all of us listeners would totally agree with this, that this pandemic has actually been a blessing in disguise to transform the businesses, to take them to a much higher trajectory. Listening to all this has infused a huge amount of optimism in me, and I am sure for the rest of the people. Because every time news that will trickle in would only linger a certain amount of uncertainty and nervousness amongst people. But all these experiences show that we can handle stress to a very large extent, and we will come out as winners to any kind of pandemic that comes. And this is the kind of message which our students probably would like to have. Thank you so much, panel members, for enlightening us with your experiences and infusing so much of confidence amongst us. And thank you so much, Finance Department. Thank you so much, Dr. Sanyal, Dr. Kirti Sharma, for bringing in this delight to us. Thank you, CCS, for helping us in arranging all the panel members. And thank you, everybody. A very good night to everyone.
Thank you so much, sir.
Thank you, everybody.
Thank you, Professor
Thank you so
Singh.
much.
Naman Garima, do you want to take it forward?
Yes, ma'am. So this is the end of the finance discussion today. We request you to join us for yet another insightful panel discussion on analytics tomorrow at 6 p.m. Have a great evening, everyone. Thank you so much.